Our economy is going to change in 2025, and in this video, I want to show you how you can find the investment opportunities that most people are overlooking. Take a look. President Trump entered the White House in January 2025 for the second time, and he wants to make some sweeping changes to our government and economic policy. To be clear, the goal in this video is not to talk politics. There are enough people doing that already. The goal here is to show you how these changes will create a unique investment opportunity. Let me show you why this matters. In 2024, the US economy is around $28 trillion big. This is our GDP. Every smart investor wants to own a piece of this, but more specifically, they want to own a piece of where the economy is moving. That's where you'll see the most growth in your investments. But here's something most people don't realize. The largest spender in our economy isn't you, me, or corporations, it's the government. So when you have a new president proposing sweeping economic changes, that changes how money moves. And if you know how money moves, you know how to profit. Trump's economic policies include mass deportations, tariffs on China, military investments, deregulation of Wall Street, energy industry shifts, and tax cuts. Somebody is going to make money off these changes, and you better believe Wall Street will figure it out first. But the average person? They have no idea where to even start, until now. Because that's exactly what I'm going to show you in this video. Stick with me until the end, because I'm going to break this all down and show you what's really happening behind the scenes. Before we dive in, let me make one thing clear. Every investment decision needs to meet 3 criteria. 1. It has to be legal. 2. It has to be financially sound. 3. It has to align with your moral compass. I'm not here to tell you what's morally right, that's up to you. My job is to show you where money is moving. You have to decide if you want to profit from it. Breaking down Trump's economic policies. 1. Mass deportations and private prisons. 2. Tariffs on China and domestic manufacturing. 3. Military investments and defense contractors. 4. Deregulating Wall Street. 5. Investing in space exploration. 6. Deregulating oil and gas. 7. Corporate tax cuts and stock buybacks. Let's break each of these down, starting with mass deportations. You might not realize this, but private prison companies see this as a huge business opportunity. After Trump's 2016 election, private prison stocks skyrocketed. Companies like CoreCivic and Geo Group saw their stock prices surge when Trump first announced these policies. Will it happen again in 2025? It's something to watch. Next, tariffs. Trump has proposed major tariffs on China, which could change where companies manufacture products. If companies move production to the US, that could boost real estate, railroads, and infrastructure stocks. But tariffs are a tax, so will this drive inflation even higher? And how will companies respond? Trump wants to invest in the military, which means more government contracts for defense companies. The largest defense contractor in the world? Lockheed Martin. Companies like Raytheon, Northrop Grumman, and General Dynamics could also benefit if the spending gets approved. But what happens if there's a budget fight in Congress? Trump has also signaled deregulating Wall Street. That's why banking stocks immediately surged after his election. Less regulation could mean higher profits for big banks, hedge funds, and investment firms. But does it also create more financial risk? That's something investors need to consider. Space stocks also rallied after Trump's victory. Companies like Rocket Lab, Spire Global, and Planet Labs jumped double-digit percentages. If Trump pushes for more space funding, we could see another boom in space investments. But the big question is, will Congress actually fund these projects? Trump has talked about deregulating the oil and gas industry. More drilling, more pipelines, and fewer restrictions. This could be great for companies like ExxonMobil and Chevron. But what happens to renewable energy stocks? If oil production surges, will clean energy stocks take a hit? Finally, Trump has proposed corporate tax cuts. History shows that corporate tax cuts often lead to more stock buybacks. That's when companies use their extra cash to buy back their own stock, boosting share prices. We saw this after Trump's 2017 tax cuts. Will history repeat itself? And what does that mean for investors? So, what do you do? If you're a passive investor, just keep buying. Markets go up, markets go down, but historically, the S&P 500 has returned 10% annually. If you're more active, look at where money is moving. Follow the trends, do your research, and don't blindly follow the headlines. If you want to stay ahead, join my free financial newsletter, Market on the Move. We break down the economy, stock market, and global trends in under 5 minutes a day. And if you want to dive deeper, I'm host free live workshop every week. Feel free to join me for 45 minutes, where I show you how to research investments, find opportunities, and systemize your portfolio.